Good morning, everyone. Welcome to this charity webinar, latest in a series of these webinars. We'll be covering trustees' responsibilities today, but actually the responsibilities here are very relevant to management too. So it's great to see a number of members of charity management teams on the call today, particularly those of you that have heard us do this webinar. We've done this webinar for many charities as well, so it's great to have you back. My name is Mike Farwell. I'm Head of Charities and Education at James Cooper Preston, and I'm joined by Catherine Wilkes, who's a Senior Manager in our charity team. Hopefully you should all have the slides on your screen. You should also have a facility to ask questions, which we'll cover at the end. The webinar is due to last up to 45 minutes, including questions, so hopefully that will finish well before midday, in time for you to continue with all your other activities. So we'll make a start just by looking at the session structure. So a brief introduction. We'll cover some constitutional requirements for charities. We'll cover responsibilities and regulation. Catherine will look at financial matters and risks, and we'll close with some of the key sector developments at the moment. You won't be surprised to know that there are many issues around the country and around the world affecting charities in a major way. For some of you who are very familiar with the charity world, much of this will hopefully confirm what you already know, but give you potentially some new ideas or some new perspectives. And for those of you that are perhaps newer to the charity sector, it will give you some hopefully insights in terms of what you're letting yourself in for by getting involved in the sector. So if we just start with some preliminary information in terms of types of charities, there's a variety of different ways in which charities can be constituted. I think it's fair to say that for charities of any size, the historical default has been to become a company limited by guarantee, and I think many of you on the call, your charities are structured in this way. There's also the possibility that charities can be structured as unincorporated associations and trusts. They tend to be relevant for smaller charities and increasingly rare these days. And I think the new charitable structure that's coming in recent times, charitable incorporated organisation, most new charities are incorporated in this way now. There's various other different types of charities, for example, companies incorporated by Royal Charter, but I think the four there are the most common. So if we move on to a little bit more information about constitutional background, so in terms of companies limited by guarantee, often for charities of any size, they may well have a trading subsidiary. So if your charity is looking to get involved in trading activities, either for activities that are perhaps closely linked to charitable activities, but perhaps there's a degree of risk there, or there's a slight concern it doesn't fit with charitable objects, often people carry these out through a charitable subsidiary, a trading subsidiary. And these ventures are also used if you're running a trading subsidiary purely for fundraising purposes. So a company limited by guarantee and indeed also a charitable incorporated organisation have a corporate existence, so they're a separate legal entity. One of the challenges with trusts and associations is that they don't have a separate legal entity, a legal status. And the advantage, I suppose, of the new charitable incorporated organisation is that they are regulated by the Charity Commission, whereas companies limited by guarantee also have to do requirements. So companies limited by guarantee have a memorandum and articles. That's your constitution. Usually they're what's called the limit of the guarantee is usually £1 for a member. We'll talk a bit about liabilities later. Usually there are members, the shareholders, and there are trustees. In many charities, these two groups are the same. But of course, as well as the legal constitution, it's very important to have appropriate policies and plans where you document what you're looking to do. So moving on to trustee involvement. There was a survey carried out a few years ago, but I think it's still quite useful, particularly I think for newer trustees, to see what the survey results were in terms of how trustees viewed their involvement with charities. So you'll see some very positive numbers here. I suppose the key one is that 90% of people actually enjoyed being a trustee, which is very positive, I think, because often people have a reluctance to get involved with the charity because they're not sure how they're going to enjoy it. But I think the evidence there is that, as well as enjoyment, it helps develop new skills and gives an insight into other areas of life. Training induction is really important for trustees, so you don't just appoint new trustees and leave them in the lurch. You need to make sure they have a proper induction process, understand the charity, and also understand their responsibilities. And I suppose part of that would be webinars such as this, where you get a flavour in terms of what your responsibilities are. Moving on more explicitly to trustees' skills, this is a relatively traditional model in terms of the right mix of skills that you would want to have on your trustee board. So you need a real mix of skills in all sorts of different areas. The ones on the left-hand side of the screen are perhaps the more traditional ones: finance, law, marketing, HR, etc. On the right, you'll see some of perhaps the more relevant new ones. So fundraising, trustees with fundraising skills are really useful. Trustees who perhaps got networking and philanthropy skills, so all charities are looking to raise money. If you've got trustees who are involved in appropriate networks, etc., then that can give you access to funding. And then I think, of course, with rapid changes in technology these days, it's very good to have somebody on board who really understands technology, whether that's how you use technology for the operational side of your charity internally, or whether it's to do with how you provide services to beneficiaries. So really important to have a good mix. I think it's fair to say that, and you won't be surprised by this, that finding trustees with fundraising skills can be quite difficult, as is finding trustees with the right networks that you can tap into for fundraising purposes. So if we move on to trustee roles, I mean, it's not, of course, just around specific skills, as in all other organisations and businesses. It's good to have a mix of different charity personality types. So this was a survey that was done a few years ago by Julia Unwin. So it lists the various types of people it's quite useful to have on your board. So and again, it's great to have a mix of these. I mean, I think I've said many times before that in those perhaps slightly less exciting moments of trustee meetings, it's quite useful just to look around the room to try and work out which category everyone falls into. And of course, people can move over a period of time into different categories. Perhaps younger people might be in a challenger role when they first join, but then after a few years, perhaps they become wise counsel, etc. So, interesting to have a mix of personality types. So you've really got an effective trustee board. So if we move on to slightly more explicit detail in terms of what's required, there's a great Charity Commission document, CC3, which is very readable, which outlines the responsibilities of trustees. This is a good document, particularly for new trustees, but also I think for people that have been trustees for a while, just to summarise what their responsibilities are. Naturally, the governing document of your charity is important in terms of your responsibilities, whether you be in a company, a charitable incorporated organisation, or a trust, etc. But at the end of the day, ultimately, the trustees are responsible for the affairs of the charity to make sure it's solvent, well-run, delivers charitable outcomes, and provides public benefit. And at the same time as doing that, you need to make sure you comply with laws and regulations. So being a trustee is not something to be taken lightly. There are real strong parameters that you need to look into in terms of making sure that you're doing the right thing. So if we move on to compliance, it won't surprise you to know that there's a whole massive legislation and compliance. There's charity law. The Charity Commission is the regulator for charities. That's important. We've mentioned the need to comply with the governing document. There's a need to comply with your charitable purposes, as we'll see shortly, masses of other legislation. At all times, you need to act with integrity. You need to avoid any personal conflicts with the charity. So, for example, if you're involved in a company that has dealings with the charity, you need to be careful that you don't get into a difficult situation, and looking after charity funds. So, compliance is a big aspect of the role. Moving on to duties of prudence and care. Trustees do need to act prudently and use charity funds and assets in a reasonable way. Sometimes there's a perception that charities are unable to take any risks at all. This is not true. Catherine will cover risk management a bit later, but I think it's a question of not taking undue risk. You need to take care when borrowing or investing, and you also have a duty of care to the charity to use reasonable care and skills using your personal skills and experience. So, for example, if you were a chartered surveyor and there was a property issue that arose, your responsibilities to do with property transactions would be greater than perhaps somebody on the board who wasn't involved, didn't have any experience with property. So it's important if you're, for example, surveyor, accountant, lawyer, etc., that you use the skills appropriately. But of course, you can also assist in terms of that duty of care by taking appropriate external professional advice. You know, if we're moving on, I think if we all find this, you consider this quite onerous. I mean, trustees, whilst they do retain ultimate responsibility, are able to delegate things to the charity management team. This is for charities, of course, of any size. And I think it's the role of trustees both to support and challenge the management team. And I think an expression I often like is the role of the trustee is to be eyes on and hands off. So perhaps not getting involved in the day-to-day running of the charity, but keeping that overview and getting involved with strategy, etc. It won't surprise you to know that many charities have some challenges in terms of trustees perhaps not being involved enough in what the charity's done, and sometimes, of course, charity trustees perhaps getting over involved. So it's relevant to keep the appropriate balance, but remembering that trustees retain ultimate responsibility. The question of whether trustees can be paid is often brought up, and I think broadly the answer to that one is no, other than some unusual circumstances. Trustees need to be careful about benefiting from the charity. Trustees are rarely employees. They can be in some circumstances, but generally that wouldn't be the case. And of course, trustees are also responsible for dealing with accounts and audit. We move on to laws and regulations, and I haven't, for obvious reasons, tried to list every law and regulation that applies to charities, but here are some of the key ones. So Charities Act, Charity Commission, all the usual employment, health and safety regulations, etc. If you're involved with, perhaps, say, for example, care homes, or if you're involved with schools, independent schools, and boarding facilities, care regulations are important. Increasingly these days, fundraising regulations and GDPR compliance are very important for many charities. And again, in terms of professional advice, it's relevant, I think, to take legal advice which helps protect the position of the trustees. So if all this is sounding rather scary and you're worried about your personal liability, I think just to reassure you, I think it's fair to say that you can probably have few concerns if you're conscientious and committed. Any liabilities can be met out of charity resources. And I think you could be personally responsible if you acted imprudently, but there are very few cases where charity trustees are found to be personally liable. The Charity Commission, as we'll see shortly, does periodically carry out investigations of charities, and we'll see some of the issues that arise there. In terms of how you can mitigate liability, well, obviously taking care with major contracts. We'll look at later at how risks are managed. Training is important, taking professional advice, clarifying with the management team exactly what you're responsible for and what they may be responsible for. And then finally on that slide, you can get some protection by taking out appropriate trustee indemnity insurance policies. They won't protect you if you act fraudulently or negligently, but they are sort of quite a useful protection, and many charities do have them. Moving on to hallmarks of an effective charity. This is actually relates to a document that the Charity Commission has now withdrawn, but I think it did have some quite useful information about what an effective charity looks like. So this is quite 6 key areas. Charities, clear about what it's looking to do. It's got a strong board, financially sound and prudent, and accountable and transparent. So a few key things there about what an effective charity looks like. So if you're considering assessing the document can be quite useful in terms of doing a self-assessment about how your charity shapes up in today's climate. I think, moving on to the next slide, how do your activities provide public benefit? These are some of the key questions. It won't surprise you that the future sustainability of charities and ability to continue in the future to provide benefit to beneficiaries is critical, and particularly at the moment with the impact of COVID-19. I think charities taking professional advice at the right times is important, as is regularly assessing risk. Reviewing structured policies and procedures on a regular basis, which is quite a challenge for some charities, is also considered to be important. And increasingly these days, considering collaboration with other charities to make sure that you maximise benefit. One thing that has come to the fore in recent years in particular is the impact on the environment. So we're about to launch a poll now, which hopefully you'll see on your scheme. Does your charity actively consider its impact on the environment? So there are three answers there: yes, no, don't know. So if I could ask you to press the appropriate buttons, and in 20 seconds or so, we'll see what the results look like. So the results are coming in. So interesting that around 3/4 of you do actively consider it. Good news is that nobody said no, and around 1/4 of you are saying that you're not sure. So I'd encourage those of you who are not sure, perhaps to go back to your charities to find out a bit more about what you're doing on the environmental side. We move on to Charity Commission regulation. So the Charity Commission is the independent regulator. There is the Charity Commission in England and Wales. There is also a regulator in Scotland, separate one. Many people are surprised to know that there are over 160,000 registered charities, and there are 1 million trustees. Average age 57, so I think many charities struggle with recruiting younger people onto their trustee boards, which I think is quite important from a diversity perspective. Some very big numbers in terms of income, investments, and employees, etc. But in terms of the spread of charities, you'll see there that there are only 1,700 charities, about 1% of total charities, where the income is over 5 million. So there are a lot of small charities. So in terms of regulation, the Charity Commission has been criticised in recent years by the Public Accounts Committees, have reduced funding, carries out investigations, bit of a focus in recent times on terrorism and religious charities. There's also a requirement to report serious incidents to the Charity Commission. This is a responsibility for charities. There is lots of guidance on this, although it can be quite difficult to decide whether something should be reported. So the types of situations where you would report would be harm to beneficiaries, financial loss or fraud, but there's a number of other things that you need to look at. So it's well worth checking with your charity to see that you have a policy on serious incident reporting, and we've got the website address there. Charities, of course, need to provide public benefit. There are 13 charitable purposes. There's been a long-running debate on this. You'll see it shouldn't be unreasonably restricted by geography or ability to pay. So independent schools have had some challenges in recent years on this front. But really, it's up to charities to, make their decisions in terms of public benefit, and of course, read the appropriate Charity Commission guidance. In terms of investigations, the Charity Commission carried out on the next slide, you will see that, no surprises, criminal activity. I think poor governance is a big feature. I get regular emails from the Charity Commission about their investigations, and I think governance, where perhaps the trustees haven't been involved or been over-involved, are an issue. I think anything that involves harm to beneficiaries, children, older people, for example, is important. Anything to do with terrorism is important. Around general election time, political activity and campaigning issues are important, because charities need to be careful they don't cross the line in terms of what is or isn't acceptable. And there have been a few issues around Brexit-related matters as well. Not surprisingly, money laundering is on the list, and any issues with stakeholder consultations. In terms of some of the more specific areas that are relevant, if you're a charity that's fortunate enough to have investments, there are requirements there in terms of how you invest the money. Key here is the need to diversify your portfolio and take appropriate external advice. More and more charities these days are also looking at ethical investments. So, for example, considering the environment and not getting involved in having investments in industries such as smoking and alcohol. So again, duty of care, reasonable care and skill. It's great if you've got somebody on board who has investment skills, but certainly it's essential if your investments are important to take appropriate advice. Moving on to property. If you're a charity with property, you have to be careful about what your powers are. You need to act in the best interests of the charity. You need to protect and maintain your property. Insure it, obviously, and then again this question of taking appropriate professional advice. There are also specific rules around compliance if you're borrowing money that's secured on a charity property. So again, some quite big issues with property. In terms of tax, there's a widespread belief that charities don't pay tax. Not surprising, it's a bit more complicated than that. Usually there are exemptions. The two biggest charity tax breaks at the moment, one is the gift aid relief, many of you will be familiar with, and the other is rates relief. But typically charities don't pay tax on investment income, regular sources of income. So for example, a charitable school wouldn't pay tax on the surplus it might make from school fees less its costs. Usually there is relief in terms of income from land and property and capital gains tax relief. The subject of business rates relief, which is typically 80% relief for charities, has been to the fore recently. I think in independent schools, for example, are a bit worried about this. That rates relief has been withdrawn for independent schools in Scotland, and that may happen at some stage in England. And then finally on that, there's VAT, very complex, all sorts of issues around whether charities making supplies that are subject to VAT. So that's something that's well worth considering, particularly if you're involved in a wide range of different activities and also relevant in terms of property transactions. And finally, for me, before I hand over to Catherine, the question of regulation in terms of your trading subsidiary. So we mentioned earlier that trading subsidiaries are often used for commercial ventures. They're quite tax efficient as well because of the subsidiary, which hopefully will make some profit, can donate its profit up to the charity, so the subsidiary pays no corporation tax. You've got your risk ring fence in the subsidiary if something goes wrong. There can be some VAT benefits. Often the funding is something of a challenge because the Charity Commission doesn't like charities funding trading subsidiaries, so that's something to look at, as is the question of allocation of costs between the subsidiary and the charity. And then finally, on trading subsidiaries, it's usually useful to have some independent directors. So I think that's more than enough from me. So at that point, I'll hand over to Catherine.
So in this section, we're going to cover the importance of controls, why you have management accounts, how these differ from your annual accounts, why you have an audit, and holding some reserves. So looking at controls, so controls are in place to safeguard your assets, be this physical assets or cash, to protect some beneficiaries of the charity and the employees, and also protect the trustees who do, at the end of the day, have primary responsibility for the charity and the liability for the charity. And also controls are in place to safeguard against fraud. Unfortunately, fraud is on the increase and criminals are becoming increasingly clever when it comes to fraud. And unfortunately, charities are not immune in this respect. So it's very important to keep sceptical and put in place controls such as your dual authorisation. So in terms of management accounting, this is very much a snapshot throughout the year as you go along. The management accounts derive from your accounting records. They compare what's actually happening against your budget. They need to be in sufficient detail to understand what is going on, but not too much detail so that it causes confusion and the loss of the big picture. Typically, we see these produced on a monthly basis, although they can be quarterly, depends on the size of your charity. And it's really, really good to include a commentary to explain variances and also to enable actions to be taken, so any issues are highlighted in that commentary. What's good to see is a forecast to see what the results are likely to be at the end of the year, and also to enable actions to be taken as we go along. It's also important to track the funds so that you can see how much restricted income you've got to aid decision making, and also to make sure that you have enough unrestricted income. So moving on to the annual reporting, this tends to be retrospective, so the annual accounts are put together after the year end and look back over the past year. These need to comply with the charity accounting rules, SORP. We've got SORP in place at the moment, but we are expecting a revision to this in the next few years. Many charities and many annual accounts are subject to audit if certain thresholds are reached, but sometimes it's actually a requirement of your trustee document or your constitution. Your audit is part of good governance, and as part of your annual reporting in your accounts, often the most interesting bit is your trustees report, and this gives you the opportunity to tell a bit of the story about the charity, you know, what your achievements, what your challenges have been, and you need to think carefully about those issues and the messages that you give within the trustees report, particularly if several people are drafting it. Also included in the annual reporting is the trustees' responsibilities, which are detailed, and also we like to see the going concern of the charity being considered. So particularly at the moment, it's very paramount, given coronavirus, to explain how the trustees are comfortable that the charity is a going concern. So moving on to think about reserves, this is a greatly debated topic at the moment because a lot of charities are actually having to use their reserves with issues caused by coronavirus. So the Charity Commission has a requirement for you to hold some reserves, but how much? You know, is it too much or not enough? And that is very much a judgment. The trustees need to be clear on the reason for holding these reserves. It might be to sustain the charity until replacement income is secured if you have a loss of income. It's very important to think about how long that might take in order to work out the level of reserves you might need to hold. And also it's very important to monitor the level of reserves that you actually have. Fixed assets form part of those reserves, and a lot of charities actually measure the level of reserves and how many months, in number of months of operating costs. Reserves are split between restricted funds and designated funds, and it's very important to look at how much free reserves you have, so how much you can actually spend, because this will help you improve the financial resilience of your charity. So we're going to move on to our next poll question, which is around reserves. So what level of operating costs do you hold in reserves? Is it 0 to 6 months, 6 to 12 months, more than 12 months, or you don't know? Okay, what are the results looking like for that one? Also, it's a bit of a split between 0 to 6 months and more than 12 months. And again, you know, there's no right or wrong answer here. It's very much a judgment. So moving on to risk management, there's a lot of Charity Commission guidance about risk management. A popular document to go to is CC26, and it's all about, you know, regularly reviewing and assessing your risks. Been very much a strong emphasis about this in recent years. Key risks you might identify are, might be around financial risks or governance and management, operational, external, and laws and regulations. So looking at some of these specific risks, COVID-19 impact, no one had pandemics on their list of risks until fairly recently, but certainly charities are often putting together a completely separate risk register in terms of COVID-19 because of the huge amount of risk it's had on finance, on people, and the services of charity. It's important to have look at how much restricted funding you have, and also your unrestricted funding, and to ensure financial sustainability. Fundraising risks, during coronavirus, people haven't been able to necessarily fundraise, or have had to become very creative in the way that they have been fundraising, because normal sort of traditional income streams might have dried up. We've seen a lot of charities recently with huge investment portfolios suffer with decreasing values around sort of March 2020, although there has been some recovery here. And obviously these are held for the long term, so there will be some fluctuation. Another risk is to do with governance. Have you got the appropriate people in place? Have they got the right skills? Are they adhering to the right practices? There's another risk around technology. Particularly coronavirus, we've all had to go and work from home, and do you have the right technology in place? Changing beneficiary demands can be a risk as well. So are you actually providing something as a charity that's actually outdated? And the big risk is around safeguarding. So are you working with children or vulnerable individuals? And do you have the controls in place? So moving on to risk management. So it's very important to establish a risk policy so that you can identify your risks and the controls to mitigate and manage these risks. When you assess your risks, it's a really good idea to prioritise those risks, because you might come up with quite a long list, and also evaluate the action to be taken. The risks may change through time, so it's very important to periodically monitor and assess these risks. How often you assess these risks is obviously a judgment. You might want to prioritise the risks that you assess more frequently, or set a review date for all risks. So who is responsible for risk management? Well, ultimately the responsibility of charities comes down to the trustees, but you might decide to allocate some of the responsibility of some of these risks to say the management or a subcommittee. And whether these should be discussed at every trustee meeting is obviously up to you and what priority these risks are. Certainly we're seeing COVID-19 being discussed at many trustee meetings more regularly than usual.
Thanks very much, Catherine. So we'll just close with some key charity sector developments. I think as Catherine's talked about risk management, it's been quite an interesting time over the last few months in terms of managing the risks relating to COVID-19. I remember I'm involved as trustee of a number of charities myself, and I remember right at the beginning of February looking at the risk register for this particular charity. I think we had pandemic down as very low risk, and we had a little discussion about possibly increasing the number that we gave to pandemic factors in light of the early days, as it became slightly clearer that this was a big issue. But of course, with the benefit of hindsight, I think we might have moved that risk up much higher, and I think we'll see most charities having COVID-19 and other pandemic related risks much higher up their risk register going forward. So there are some really big risks on this first page. I suppose the purpose of this section is just for you to sort of perhaps go back to your charities and challenge people about whether you've addressed these risks, or alternatively be comfortable that you already know that many of these risks are addressed. I won't go through every single one. I'll just pick up on some of the key ones. So COVID-19 probably one of the real big ones just for the moment. Hopefully it won't be a huge risk going forward. Reputation management is something that has come to the fore in recent years, as we've seen issues at charities creating damage to reputation, which had a really big impact. So, for example, there were some well-documented issues reported to do with Oxfam and Save the Children, which had a huge impact on their fundraising ability. So, guard your charity's reputation very, very closely. Not surprisingly, financial resilience and sustainability has been a big theme in recent times. I think we are seeing, as well as the ability of charities just to survive, we are seeing that funders are particularly interested in the financial resilience of charities, because they don't want to be providing funding to a charity which may collapse in the near future. So demonstrating resilience is really important. We've also got safeguarding on this first page. So, safeguarding is for many, many charities and is always likely to be a significant issue. So important to have appropriate policies and procedures in place, and also having the culture within your organisation, so that safeguarding is seen as important. So, I think we see that many charities, in fact, virtually all charities that work with children, do have strong safeguarding processes in place, but lots of other charities, perhaps working with more vulnerable adults, need to be sure that they are doing the right thing too. Not surprisingly, Brexit is on that list, and I think we're seeing as we move through the COVID-19 period, Brexit increasingly on the agenda. We wait to see what the impact will be there. Catherine has mentioned fraud and cybercrime, and sadly, this has an impact on charities as it does and other organisations. So it's a question of reviewing your processes there to make sure that they are sufficient. In terms of other issues, increasing demand from beneficiaries, I think there is a well-documented record that in difficult economic times there is an increased demand from beneficiaries. I think there's also lots of surveys that have come out in recent times around mental health and the impact of mental health. So I think we will see, as well as an increasing demand there generally in terms of mental health matters, I think COVID-19 is forecast to have a big impact both currently and into the future. So looking at the increased demand from beneficiaries, or if you're a charity perhaps involved with a food bank, for example, clearly there's likely to be increased demand there. As the world gets more and more complicated, documenting policies is really important. If something goes wrong, the first thing that people do is find out whether you had a policy to cover it. So really important to make sure your policies are up to date. Catherine mentioned the use of reserves. I think we do sometimes see that charities are a bit reluctant to use reserves, but I think if the importance of reserves in recent times has become quite clear, and that reserves do give you the ability to withstand major shocks such as something like Brexit or the COVID-19 and the recession that will follow. So reserves, really important. So I think charities sometimes wonder whether they have worried that their reserves are quite high and that people won't fund them. I think increasingly we're seeing that having a reasonable level of reserves is quite useful in fundraising, because funders will see that they are supporting a sustainable organisation. So, reserves is a really big issue at the moment. Not surprisingly, employees recruitment and retention is a key theme for many organisations. I think we are going to unfortunately be seeing some restructuring generally over the coming months and years as people look at doing things differently. But I think most organisations still see having the right people on board and retaining the ones that they want to keep is a big issue for their future success. If we move on to other final charity sector development, so I think we'll see charities reviewing their strategy on a very regular basis. I think we see an increased number of charities doing scenario planning. So this would be, what would we do if we lost a particular income stream or if something happened. Sometimes it can be quite scary to look over the cliff edge, but usually I think we find that when people do look at this type of planning and work out what they would do if something untoward happens, I think they feel slightly more comfortable about dealing with that issue in the hopefully unfortunate likelihood that it did happen. We see charities looking at new ventures in terms of fundraising. We see more and more collaboration. I think it's fair to say that there have been fewer charity mergers in the last 15 years or so than people expected, but we do see charities collaborating a lot with other charities and other organisations now. Equality and diversity has been an issue for some time, but it's become increasingly in focus in recent months. And we've talked about climate change. I mean, finally, just maintaining relevance in a changing world. The world is changing quite rapidly at the moment with a whole variety of global factors in place. So looking at things, for example, like flexible working for your employees and delivery of services. If you are looking at new ventures, it's just a sort of a model here in terms of some of the things to look at. So a whole range of topics that you need to consider if you're looking at a new venture, and not least of which is the question of reputation. So if you are looking at doing a new venture, and particularly if it's primarily focused on raising money for your charity but isn't necessarily closely linked to your charitable objects, work out what it might do for your reputation, as well as all the other factors to consider. And then the final section on mergers and collaboration, which we sort of touched on a bit already. So a possible response to hard times. I think, as we've discussed, collaboration is perhaps an easier thing to achieve than a full merger, because historically mergers have been at a low level. The Charity Commission is keen on more mergers. I think regulating 160,000 charities is a bit of a challenge, because particularly with all these small charities. I think we see some charities moving into merged service provision. But the biggest challenge is usually the independence. You've got trustee boards who are fiercely protective of their own activities, and similarly with management teams. So the whole independence issue of merging two charities into one is quite difficult, which is why collaboration may be slightly more attractive. And then in terms of the potential benefits of collaborations, you know, if your merger or collaboration went well, here are some of the things that potentially it could benefit you. So I think one of the benefits will be around, you know, diversification, involvement, a whole range of different activities and income streams, which perhaps reduces the risk, and therefore you perhaps need to hold a lower level of reserves. And, you know, if you merge or you collaborate with appropriate charities, it can allow you to manage your operations much more effectively, potentially sharing your skills with other organisations, and other organisations perhaps where your skills are not quite so strong, enabling you to benefit from their skills. So that's the end of the webinar. We've had a couple of questions which we'll deal with now. The first one is, what risk management processes have charities been using to manage the impact of COVID? Catherine, did you want to take that one?
Yes, so a lot of charities we're seeing actually set up a separate COVID-19 risk register. It's a moving target, obviously, so it needs to be updated regularly, and you know, we'll see new measures put in place. We've seen some of the government schemes be used. Obviously, a lot of those are coming to the end. We've seen a lot of charities look at alternative income streams and being creative there, and obviously some of having to dip into reserves to manage the risk there to ensure going concern of the charity.
Yeah, that's right. We've got another question. Now, this is quite a common question, and I think has come from the session earlier where we talked about trustee skills. How do you find new trustees? I think it's fair to say that there's probably no charity in the country with a perfect mix of trustees. So I think trustee recruitment should always be on your agenda. And even if you do end up with the perfect mix of trustees, it's quite good to make sure that you have got some new blood coming in periodically, so the trustee board doesn't become stale. So the traditional method that many charities have used to recruit trustees has been around people that some of the trustees know, networking or involvement with other charities, etc. And that you know, can work quite well. Although it does narrow the pool of people that you can choose from. Increasingly, we're seeing charities using slightly more formalised processes for trustee recruitment, involving, for example, adverts or websites. There's a particularly good one called Neural, where charities advertise for new trustees, and then charities usually using more formal processes in terms of interviews, etc., for you know, making sure that they choose the right trustee. So you know, slightly more formalised mechanisms for recruiting trustees, but you know, trustee recruitment, particularly in particular areas. So people with an ethnic minority background and younger people, you know, can be particularly difficult to find. So they were the two questions we had. I don't think any more questions have come in. So I'd just like to thank you all for attending, and particularly for those people that have heard much of this webinar and previous webinars that we've done for specific clients. I think the good news is that nobody's dropped off during the call, so thank you for listening, and enjoy the rest of your day. Thanks very much.
Thank you.
Bye-bye.